This is Pre-Market Pulse, powered by Zinch, a fast, clean read on the tone of the market before the opening bell. No hype, no noise, just the signals that matter. Here's how the market is setting up this morning.
Good morning, cobbers, and welcome to the Zinch.com Pre-Market Pulse for Thursday, April 9, 2026. Wednesday's ceasefire euphoria lasted less than 24 hours. Iran is already saying the deal has been broken. Oil is climbing back. Futures are giving up a fraction of yesterday's massive gains. Here's what we're watching this morning. The numbers: S&P 500, 6,800.75, down 0.34%, minus 23.00. NASDAQ, 25,012.00, down 0.25%, minus 62.25. Dow, 47,956.00, down 0.39%, minus 188.00. Commodities: Brent crude, $103.50, up 5% from Wednesday's $98.50 low. WTI, $93.75, up 4.5%. Gold, $4,720 up. Safe haven bid. Context: yesterday was massive. Dow up 2.84%, S&P 500 up 2.50%, NASDAQ up 2.4%. Today's pullback is a pause, not a reversal. The market is waiting for clarity on the ceasefire and this morning's triple data print. The story: ceasefire gets off to a shaky start. The 2-week US-Iran ceasefire was announced at 6:32 p.m. Eastern Time Tuesday. By Wednesday, markets had priced in a full peace dividend. By Wednesday night, the cracks were showing. What happened? Israel continued strikes. Despite the ceasefire, Israel launched fresh strikes on Hezbollah targets in Lebanon. Iran views this as a violation. Iran's warning: Tehran issued a statement saying some terms of the ceasefire have been broken. The language is alarming but not a deal breaker yet. Oil rebounds. Brent crude, which crashed from $115.50 to $98.50 on Wednesday, has climbed back above $103. The market is repricing the probability that the ceasefire holds. Skepticism was always there. Even during Wednesday's rally, traders noted the deal was fragile. The market is now testing whether the ceasefire can survive the first 24 hours. The key question: is this a temporary hiccup in a genuine peace process, or the beginning of the ceasefire unraveling? The answer will determine whether oil stays near $100 or spikes back toward $115. The data: triple print at 8:30 a.m. Eastern Time. This morning is heavy on economic data. All three releases hit simultaneously at 8:30 a.m. Eastern Time. 1. Core PCE Price Index, February. Prior, 3.1% year-over-year. Consensus, 3.0%, slight easing. Why it matters: this is the Fed's preferred inflation gauge. A reading above 3.1% would be hawkish and pressure equities. A reading at or below 3.0% would be modestly bullish. 2. GDP Final, Q4 2025. Prior, 0.7% annualized growth. Consensus, 0.7%, no revision expected. Why it matters: the final revision of fourth quarter 2025 GDP. A downward revision would confirm economic slowdown. 3. Initial jobless claims. Prior, 225,000. Consensus, 220,000. Why it matters: the labor market has been strong. If claims spike above 240,000, it signals the oil shock is hitting employment. All three hit at 8:30 a.m. Eastern Time. Expect volatility at the open. The earnings picture: first quarter 2026 earnings season is just getting started. Delta Airlines reported yesterday and beat expectations. The stock surged 12.5% in pre-market. Delta's beat is notable because it shows airlines are absorbing higher fuel costs without destroying margins. That's a positive signal for the broader economy. Today's earnings are lighter. The real action picks up next week when the big banks report: JP Morgan Chase, Goldman Sachs, Bank of America, Netflix. The bigger picture: let's zoom out. Wednesday's rally was the best single-day performance since the ceasefire was announced. But context matters. The S&P 500 is still down roughly 4% from its February highs. The NASDAQ is still in correction territory. Oil at $103 is still elevated. It was $85 before the Iran conflict began. The Fed is still projecting zero rate cuts for 2026. PCE inflation is still running above 3%. The ceasefire rally was real, but it was a relief trade, not a fundamental shift. The underlying headwinds haven't changed. What changed is the probability of catastrophic escalation. The technical picture: S&P 500 closed at 6,782.81, back above the 200-day moving average. The 200-day MA is now support, a close below it would be bearish. Next resistance, 6,850, 50-day MA, then 7,000, psychological. If PCE comes in hot, expect a retest of 6,700. What to watch? 8:30 AM Eastern Time. Triple data print, core PCE, GDP final, jobless claims. This is the most important data point of the week. Pre-market oil, watch Brent crude. If it climbs above $105 before the open, expect futures to deteriorate further. Iran headlines. Any statement from Tehran or Washington about the ceasefire status will move markets immediately. Delta Airlines is up 12.5% pre-market after beating earnings. This will be the most watched individual stock at the open. The bottom line, futures are modestly lower after Wednesday's massive rally. The ceasefire is showing early cracks. Oil is rebounding. The triple data print at 8:30 AM Eastern Time. Core PCE, GDP final, jobless claims will determine whether the market can hold Wednesday's gains or gives back a portion of them. The ceasefire is still intact, technically. Iran hasn't declared it dead, but the language is getting tense, and the market is watching every headline. Today is a data day first, a geopolitics day second. That's your Zinch.com pre-market pulse for Thursday, April 9, 2026. Good luck, and goodbye.